What's up, guys? It's Andy Frisella.
This is Director X.
This is Amberly Lago.
This is Sina Sadaf.
Yo, this is Apathy of the Demigods.
This is Bradley and Michael Francis here.
This is Chris Voss.
Yo, this is Charlie Tuna.
This is Ryan Serhan.
This is James Harris.
Hey, this is Steve Sims.
Hey, what's up? It's Billy G.
And you are listening
to the Run GpG podcast.
Stop playing. Please stop.
Dr. Saifedean Ammous is the author of The Bitcoin Standard, the best-selling book on Bitcoin translated into 30 languages. He is also the author of the newly released The Fiat Standard and the forthcoming textbook, Principles of Economics. He teaches courses on Bitcoin and economics with his online learning platform, Saifedean.com, and hosts the Bitcoin Standard podcast. Dr. Ammous holds a PhD from Columbia University, a master's from the London School of Economics, and a Bachelor of Engineering from the American University of Beirut. I'm looking forward to discussing all things Bitcoin, fiat, and the current state of the crypto market with the man himself. Saif, good to see you again. Welcome to the Run GpG podcast.
Thank you so much for having me. It's a pleasure to talk to you, David.
Yeah, I've been really looking forward to getting you on the show because there is a lot going on with Bitcoin, crypto, blockchain, and you're not just an expert, with a respected viewpoint and opinion, but we're at a point where the topic of, digital assets and of course, Bitcoin are not just timely and relevant, but I think it's also important for a lot of reasons. We've got regulatory issues, we've got inflation, collapsing currencies, and so much more. We're somewhat at a pivotal crossroads in a lot of ways. Would you agree with that?
Yeah, I definitely agree. I think it's been a massively eventful last couple of years. And I think on the monetary front, we've had a relatively quiet last couple of decades with relatively few examples of hyperinflation and relatively low inflation in most advanced economies. But I think that's beginning to change now. I think we're back to the ugly days of the 70s and 80s with a lot of inflation in many places all over the world. And I think it's only going to get worse looking at the way that governments have been behaving. So it's a very timely topic to be talking about right now.
Yeah, 100%. And for those of you just introduced to you and maybe your books for the first time, you do such a good job of explaining things in a really simple way. So to lay the groundwork for the meat of our discussion, what is your definition of Bitcoin?
My definition of Bitcoin is software for running a decentralized network, and the decentralized network has its own currency. And what it does is it allows you to take part in a payment network that is peer-to-peer. For me, the most interesting aspect of Bitcoin is that the payment network has its own currency, and that currency is the least inflationary currency that we've ever had. Its supply is growing, but it's growing at a constantly decreasing rate. And its rate of growth tends to zero eventually, and then it stops growing in supply, and the supply remains fixed. So it's the first asset that we've ever had in human history that will remain strictly irresponsive to demand. No matter how much demand increases for Bitcoin, there's no way of making more Bitcoin than the 21 million that should be made, and nobody has a way of changing that. And this is why I think it's unique and very different from all other kind of digital currencies, because all the other digital currencies are centralized enough that you can see how the supply can be changed. But with Bitcoin, nobody can change the supply. And that, for me, guarantees the credibility of the monetary policy.
Yeah. And that by extension of that, you talk about hard money asset and why Bitcoin is the hardest currency created. Can you expand on that a little bit?
We've always used whatever is the hardest thing to produce as money. If you look at any particular place, people will always use the thing that is the hardest to make as money. And so historically in the world's biggest markets throughout history, they've always tended toward the use of metals, and then precious metals, and then in particular gold. It's because the supply of gold is the one that increases the least as a response to demand. So gold's supply increases at around 1.5% to 2% per year And that's why gold has the lowest supply growth rate. And that's why basically gold became money de facto all over the world by the end of the 19th century. So when it comes to money, the hardest money always wins. The hardest money ends up holding on to its value for two reasons. The first, I think less important one, is the fact that people recognize this hardness and then they choose to put their money in it. More important than people recognizing it is simply people playing out economic reality. So people who save their wealth in things that are easy to produce will just witness their wealth dissipate as the producers of that thing make more and more of it and then bring its value down. So if you put your money in copper, if you put your money in iron, in any kind of commodity that's easy to produce, it's not going to last. Either the good itself is going to fall apart and lose its value, or people who can make the good are going to make increasing quantities of it and bring the price of it down. This, for me, is why Bitcoin is fascinating and very interesting, because it's a form of money that's available for everybody in the world. And it is also the hardest money that has ever existed.
Yeah, I appreciate that breakdown very much. And I do want to talk about the book for a minute, the Bitcoin Standard, the decentralized alternative to central banking. As mentioned, it's a best-selling, groundbreaking study on the economics of Bitcoin. It's really become required reading for those who are educating themselves on Bitcoin. It's always at the top of the list when it comes to recommendations. The book was one of the first explaining Bitcoin's value proposition and the implication of its unique properties. Did you expect the book to become as popular as it is, or did it surprise you how iconic it's become?
No, it's definitely surprised me. I mean, I was writing it as an academic. I thought it would be an academic book. I did not expect it to get popular with general readers, but I'm glad that it has, athletes and people from all over the world read it. So I'm very glad about it. It's been translated to like 30 languages at this point. Pretty incredible. I did not expect that to happen.
And years later, what's the most common remark you hear about the book? When someone meets you.
Well, there's the one where I bought Bitcoin and it's worked out great, so thank you for that. Just get a lot of these. And then I think maybe even more common than that is the discussion of time preference. People really like that. And a lot of people told me it changed their life completely just reading that, without, regardless of what Bitcoin did to them, regardless of the impact of Bitcoin, just thinking about time preference as a concept is extremely powerful. And I was always surprised at how few people spoke about this. So I put it in my book because I thought it was really important, and I'm glad that a lot of people seem to agree.
And you call Bitcoin the Immaculate Conception. Can you break that down for us?
Yeah, the thing about Bitcoin is that the way that Bitcoin was started really is very unique. From day one, Bitcoin didn't really have an admin. It only had users. So Satoshi Nakamoto, the guy who made Bitcoin, was only around for a couple of years at the beginning, and then he disappeared. And since then, nobody has been able to be admin of Bitcoin. And so it had this kind of perfect start where someone anonymous did it, and it continued to operate while a lot of people tried to change it, and none of them was able to change it. And so we have this really unique Frankenstein almost, where somebody made it, but now nobody controls it. We've made this new thing that nobody is able to make, nobody's able to take charge of. And so it just exists out there as a neutral protocol that anybody can use, anybody in the world can use, but nobody can control. And that's an extremely powerful idea, because if nobody can control it, everybody can use it. And that's where its real power lies. Everybody would like to be the one who controls the money supply that everybody uses, but it's very difficult if you're the one, to convince everybody to use yours and not theirs. But everybody can agree on using something that nobody else controls. And that's where it's very powerful.
Yeah, absolutely. And it brings up an interesting question, because Bitcoin as a cryptocurrency, it's, arguably so valuable that nobody really wants to spend it, right? So in fact, you're hearing about less and less Bitcoin supply on exchanges. Most are hodling, right? Has Bitcoin become too successful compared to its design by Satoshi?
No, I don't think it's too successful. I think it's succeeding just right. It's doing its job. It's impossible for a form of money to go from zero to $1 trillion in an orderly, slow manner. If people realize that this thing is going to go up and it's going to go up a lot, it's going to have a lot of volatility on the way up. So before it gets used widely, a lot of people think of Bitcoin as being an alternative to Visa or PayPal. Bitcoin isn't similar to credit cards, and it's not a replacement for credit cards. Bitcoin is an underlying asset that can be fit into any kind of other payment. So what you need is not just, switching from Visa to Bitcoin. What you need is to switch from the dollar to Bitcoin. And so you can't just flip a switch and switch completely. You still have to pay your employees in dollars, and you still have to accept payment from your clients in dollars. But what happens is, over time, as your cash balance in Bitcoin, you can start accumulating a small cash balance in Bitcoin. And in time, as it grows and other people start accumulating more cash balances in Bitcoin, more trading opportunities emerge between you and other people, and you can start exchanging Bitcoin for other goods and services. But it's not something that can happen. It's not like switching from Apple to Mac or Mac to Apple. There's a liquidity question that's involved. And in order to solve that, people need to accumulate more and more and more cash balances in Bitcoin. That's what's happening. The amount of cash balances held around the world in Bitcoin have gone from $0 to $1 trillion in about 12 years. We need to do another 10 trillion, I think, and then Bitcoin will become a pretty common mechanism for payment, I think.
Yeah, that makes sense. That explanation makes sense. So, with more and more, mass adoption, institutional adoption, and some of the estimates we're seeing, can the Bitcoin network handle onboarding 1 billion people over the next 5 years, or what needs to happen?
Yeah, I think the network itself can handle it through the Lightning Network. The Lightning Network is basically onboarded El Salvador over the last 5 months. So in September, El Salvador started using Bitcoin. Everybody downloaded a wallet. It is working. It's working fine. Getting on the network itself, again, as I said, is like going from Apple to Mac. That's not the difficult part. The difficult part is in liquidity, and that's something that's going to take time. It's just people have their cash balances and their incomes and their expenditures denominated in dollars, and they have to extricate themselves from that into a Bitcoin world. It's a gradual process, but I think, the earlier you do that, the better off you will be. And so there's a strong incentive for people to start getting into that, and I think a lot of them are.
Here's a question I've been thinking about, and I want your perspective on this. What happens when block rewards are gone, like when all the Bitcoin's been mined? Have you thought about that?
I think it's a little bit of a fundamental difference in how different people look at economics. So from the Austrian perspective, it's what determines whether things are brought onto the market or not is demand by consumers. So if consumers want something to happen, entrepreneurs find a way and make it happen. The Keynesian, more mainstream perspective on economics likes to posit things from a mechanical perspective, as if it's like an engine, and as if these things need to fit into neat mathematical patterns in order for them to work out according to the formula set by dead economists back in the day. So from the Keynesian perspective, we look at and we see, all right, well, right now the transaction, the block rewards are what is rewarding the miners, and that's what's securing the network. If the block reward runs out, then what's going to secure the network? Well, no. From an Austrian perspective, you realize that what's securing the network is the fact that people demand the network be secure and they pay for it. So currently you pay for it through the inflation primarily. The increase in the supply of Bitcoin is devaluing your Bitcoins, but it's an inflation that you're willing to take because it's keeping the network secure. If that stops being the case, you want to use the network, you want to move your coins. There is no conceivable scenario in which people demand Bitcoin and want to hold Bitcoin and value holding Bitcoin and value transacting with Bitcoin necessarily, because you can't just hold it, you have to buy it and sell it. There's no conceivable scenario in which people value this, but then they don't find a way of paying the miners to provide it. It's kind of nonsensical. It's almost like saying, the fishermen and the town people all meet in the fish market every day. And if we just shut down the fish market, then everybody will starve because there will be nowhere for them to meet. Well, no, the fishermen have the fish and the people of the town want to eat the fish. They're going to find another place and they're going to meet and they're going to buy the fish. There's no conceivable scenario in which the fish rots while the people go hungry just because they don't know how to meet each other. They'll figure out how to meet. It's not an insurmountable technical problem. And in the case of Bitcoin, the solution is very obvious. They'll figure out how to meet in the sense of the users of the network will pay transaction fees that will get their transactions cleared. And that's really how the network ultimately works. The transaction fees are the reward for the miners to mine honestly. And so the reason, the way that the security model works is that if a miner doesn't want to mine, then they lose money. They're just wasting their equipment. If they want to make money back on the equipment and on the investment that they've put into it, the only thing that they can do is give the network what it wants. And the network wants correct transactions that are valid, and they don't want somebody who messes with the supply or with the consensus parameters. So miners have to satisfy the users of the network, and in order to get paid, and they will get paid. Now, what the level of transaction fees that is going to be necessary for the network to remain secure is unknown to me. I can't claim to know, how much we're going to be paying in transaction fees 50 years from now, but we'll pay enough. How do I know that? If the transactions don't work, people will pay a higher fee in order to get their transactions through. There's no conceivable scenario in which, Bitcoin continues to succeed. And so we have the equivalent of, let's say, $10 trillion stored in Bitcoin today. The people who own $10 trillion can't afford to pay for the miners to keep operating securely. It makes no sense in my mind.
Yeah, that was a fantastic illustration, actually. I'm going to use that one. I think it's good. I do want to ask you about the concept of, Bitcoin hodlers, Bitcoin maximalists versus the rest of the crypto community, because this is such a common, topic for conversation. Bitcoin maxis, they believe the world's binary. Bitcoin maxis, they believe the world's binary. Bitcoin and shitcoin and no in between. But I need to ask you, what are your thoughts on the continued development of the crypto space, decentralized infrastructure, smart contracts, earning yields on DeFi, the proliferation of NFTs? Basically, why should we stop innovation at, Bitcoin is sound money, ignore everything else? I guess the question is, have Bitcoin maximalists evolved their thinking at all, or is it still the same?
No, I think,
it's a loaded question, Saif.
It is a very loaded question, yeah. And it's presented in a way where, I can only answer by saying, yep, I've changed my mind and you're right and I'm wrong, or no, I am closed-minded. So given that choice, all right, I'm closed-minded. But, I've also been getting called closed-minded about this, and many people like me have been getting called about this for years. And I don't think, I don't think we've seen anything to suggest that there's anything different in this. I think ultimately the case against shitcoins is multifaceted, but ultimately it really all goes down to the fact that this is all digital stuff. It's not copper and gold and national currency with central banks and governments and armies and militaries behind them. This is all zeros and ones on people's computers. All of these digital currencies are like that. And for me, the reason that I was skeptical about Bitcoin for many years when I first heard about it is the fact that I knew that, if you study monetary history, you know that the incentives to mess with the money supply are always so big that they will always eventually overcome any kind of system that is put in place to protect them. So everybody who's had the ability to mess with the money supply eventually has. If the possibility existed for anybody anywhere at any point in time to change 21 million, I'm no longer interested in Bitcoin. If that possibility existed with Bitcoin, I wouldn't really be interested in Bitcoin. And that possibility exists with all shitcoins. And I think it's very, very clear that that possibility is there. In fact, this is, I credit Pierre Rochard who says this, I'll start taking a shitcoin seriously once it's had something like SegWit2x. Once we see something contentious happen with a shitcoin, where the people who are behind the shitcoin, and effectively with every single shitcoin, there is a marketing team behind them. And, getting those 10 people into one room and putting a gun to their head is enough to do whatever you want with the protocol. It's precisely because they're run like companies. And that's great, and that's very efficient, and it's great for marketing. And this is, of course, the one area where the coins are infinitely superior to Bitcoin, because Bitcoin has no marketing team, Bitcoin has no CEO, nobody has a pre-mine of Bitcoin who would benefit from investing in Bitcoin marketing. So all of these altcoins, they have great marketing, which means they're able to command a lot of attention, and they've been able to piggyback on the reputation of Bitcoin and on the way in which Bitcoin operates throughout all of these years by presenting themselves as an alternative to Bitcoin. That's why I don't find them interesting. And I think what they've done is they're selling securities, which is in contravention of securities law, which in my mind is fraudulent, tokens that are getting pumped under false pretense, and it's all basically buzzwords and excuses for launching tokens and basically trying to benefit from monetization, trying to get some of that Bitcoin number go up juice and pretending that, but they can't have that because they can't have the fixed supply. So for me, that renders everything else moot.
It's a fascinating breakdown. I know, most Bitcoin maximalists and advocates, they make the moral argument, right, about why Bitcoin's better. I'm not sure if moralizing money is the right approach necessarily, but I do appreciate that perspective. And speaking of Ethereum, what are your thoughts or broad stroke thoughts on the current NFT explosion in popularity?
I'm not concerned with it. I'm not interested in it. I don't think, generally I'm just not a person who's into collecting things. I don't like to own stuff in general. I'm a person who only buys things that I need. And I made this change in my life about 10 years ago, and it's been one of the best things that I've done.
Are you a new real estate agent or thinking about getting a real estate license? If so, you're going to want to ask about the Greater Property Group's Agent Scholarship Program. Why pay for the cost of the course yourself when the Greater Property Group will subsidize the cost for you? Make sure you reach out and get all the details on the Greater Property Group's Agent Scholarship Program. The Fiat Standard, the debt slavery alternative to human civilization. This is the book here. Here's the book. You talk about the world's earlier shift from the gold standard to today's system of government-backed fiat money, and you outline that Fiat Standard's purpose, and you examine how Bitcoin will affect that over time. So is this everything that you didn't say in the Bitcoin Standard? What was the genesis behind this book?
I wanted to examine the question of how Bitcoin is going to rise. So in the Bitcoin Standard, I make the case for why Bitcoin is likely to continue to rise, but very little on how it's likely to rise. I want to write this book so that I could give somebody who has basically no background knowledge in computer science or in economics the ability to understand how this thing functions. That's a great way to approach the fiat system. There's been a lot more written about the fiat system than Bitcoin. Bitcoin provides us a great analogy to look at, and the way that I wrote the Bitcoin Standard seemed to resonate with a lot of people. So let me apply the same thing to studying fiat money. That was basically the driver for getting into the fiat, for writing the Fiat Standard for me.
Yeah, and through the comparisons in the book, you mentioned that Bitcoin could be our next step forward, and then you say this is really interesting. Rather than a messy hyperinflationary collapse, the rise of Bitcoin could look like a debt jubilee and an orderly upgrade to the world's monetary operating system, revolutionizing global capital and energy markets. So I guess after reading that, was Satoshi a time traveler, and did he invent Bitcoin to save the world?
I don't believe in time travel, so I'm going to go ahead and boldly say no. The key thing is, once I started looking at fiat like Bitcoin, I started thinking, all right, how does fiat get mined? And that's the door to the rabbit hole. Once you go down that rabbit hole of that question, how do you mine fiat? So I started thinking about that critically, and you realize the way that you mine fiat money is by issuing loans. Every time a new loan is made, new fiat money is created. Under a gold standard and under a Bitcoin standard, if you wanted to think of them as a game, these monetary systems as a game, they function The winning strategy is collect as many gold coins as you can, or collect as many Bitcoins as you can. With fiat, it's the opposite. Collect as many liabilities in fiat as you can, borrow as much fiat as you can, get a short position on fiat. The winning move on fiat, the way to protect yourself from the fiat system, is to short it, and you short it by borrowing. As Bitcoin rises and as the value of Bitcoin rises, more and more people start holding on to Bitcoin rather than getting into debt. So instead of buying your house on debt, you stack Bitcoin and then you just buy your house with your Bitcoin, and now you don't have debt. So what's that doing to the supply of the US dollar? It's reducing the creation of US dollars. But what's going on is that Bitcoin is allowing us a technological solution that obviates the need for the fiat system. As the fiat system reaches this kind of limit where everybody's already up to their eyeball in debt, and we need more debt in order to make this work, we can have this world in which the value of everybody's liabilities is declining as Bitcoin is rising, and everybody's accumulating savings in Bitcoin. And yes, there is going to be a significant redistributive effect, but it's likely to be a soft landing, because anytime you start witnessing your local currency and your local fiat falling apart, you just switch to Bitcoin. You have you have the lifeboat ready for you whenever you need it.
Yeah, that's well said. What's the likelihood that a serious banking crisis happens in the next few years in North America? Is that something we have to worry about?
Fiat, it has been a perpetual banking crisis. Banks are always insolvent. Banks can't meet their obligations, and they're constantly on life support from the central banks. We don't get so much of these very big crises anymore because the central bank is always ready to bail them out with your money. So it's this slow bleed where everybody in the world is watching the prices of everything around them go up, and everything is becoming less affordable for everybody on the planet, unless you are in the chosen few who get low interest rate loans from your local central banks. These people have their quality of life constantly improved by inflation because they're the biggest borrowers and they borrow at the lowest interest rates, whereas the vast majority of the population are just getting worse off, are suffering because of it.
Couple questions left. In your opinion, why has the crypto market and Bitcoin taken a crash? I mean, there's a lot of discussion about this. We know, why that's happening. Those that are informed, in your opinion, what do you think's happening?
I think, short term, within the scope of anything less than a year, any movement in the price of Bitcoin is just Bitcoin being Bitcoin. So, we can pinpoint specific triggers, but there's just a very large amount of volatility in the short term. What matters is that in the long term, look at it. Where was the price 5 years ago? So early 2017, Bitcoin was around $1,200 this time of year, I think. It was around $1,000. So still up 38x in 5 years. So when you look at it from this perspective, a lot of things happened over the last 5 years, but Bitcoin has done a 40x in 5 years. That's just
it's true. And I mean, people have to look at the whole, like the long term chart, not just what's in front of them. That's what people tend to do, is just, they look at the last few weeks and they lose their minds. Also too, the crypto exchanges, they encourage volatility, right? With all the leverage you can have on there. It's crazy. It's absolutely insane what you can do with, some of these altcoins. But okay, the wrap up here. What does Saifedean Ammous do for fun?
Well, I like to play football. I don't play it that much now because I have kids to take care of. I like to watch football as well. Are
we talking like American, like NFL? Like
no, soccer.
Soccer. Okay. Yes. I kind of figured. Yeah.
Yeah, I'm a fanatic. I've been obsessed with this game since I was a kid. Always dreamed of becoming a footballer. But at least now my book is liked by a few professional footballers, so I wasn't a complete failure.
No, exactly. Well, now we have athletes, only wanting to get paid in Bitcoin. Actually, I did want to ask you about current, future projects. Maybe tell us about the principles of economics. What's that all about?
Mm-hmm. Yeah. So when I finished the Bitcoin Standard, the first book that I started working on next was the Principles of Economics, which is a textbook in economics. And I started working on it before the Fiat Standard, and then I was working on the two of them at the same time. And then I finished the Fiat Standard earlier. but Principles of Economics is almost done. It's on its way to completion, and it's the book that I wish that I had when I was a university professor, when I was teaching economics, because the current crop of textbooks are horrific. They're Keynesian, and they get everything wrong, and it's excruciating to try and teach what's correct while going through all of this Keynesian nonsense. So I decided I'd like to write the book that I wished was there. And I just, the fact that a lot of people liked the Bitcoin Standard and liked the way that I explained sophisticated economics concepts and simplified them made me want to do it with this book, to just rewrite this book and write this book in a simple way so that it's written in somebody could study it for a university course, but somebody could also sit down and read it in a couple of evenings, well, maybe a few more than a couple of evenings, and come up with a very good understanding of the most important concepts in economics from the Austrian perspective.
Awesome. Now, besides Bitcoin, is there an app or a piece of technology that you cannot live without? Like, is it the weather app on your phone? Is it something like that?
I could live without pretty much everything. I guess email might be the most important one, but if I were to choose my favorite, Twitter. Like if I could only pick two things from the internet, I'd pick Twitter and email. I think everything else is more or less time wasting.
Okay, final question. This will make you think. If you could have dinner with any three people in history, past or present, who would they be and why?
Oof. Well, I'd definitely say Satoshi Nakamoto. That would be one. I'd say maybe Murray Rothbard would be another one. I'd definitely be interested in having him. Yeah, Murray Rothbard and Mises. I'd say Murray Rothbard, Ludwig von Mises, and Satoshi Nakamoto.
Wow. What a dinner table. Fantastic. Yeah. What an awesome discussion today, Saif. It was an honor to have you on the show to discuss one of the most relevant topics, as we said at the beginning of the discussion, so timely. So good to get your perspective. Thanks again for taking time. Where can the people find you, or where do you want them to go to connect with you or follow you? What do you need there?
Yeah, my website, saifedean.com, is where you can find my books, and you can subscribe and become a member and find my online courses. I teach economics courses online. After I left my university job, I'm just an independent educator online. So you can go to my website, saifedean.com, sign up, and get access to my courses and books. And you can also go on my Twitter, @Saifedean, where I'm pretty active, and I enjoy Twitter a lot. And you can also find the Bitcoin Standard in 30 languages, all listed on my website. And it's also available on Amazon, as is the Fiat Standard.
Okay. Thanks, Saif.
All right, man.
Appreciate
Cheers.
you.
Take care.
Thank you, bro.
Take care.
Peace.
Bye-bye.